good. So let's start the class. Please mute your mic. Okay, so hello and sorry about the yesterday. Let's continue our topics. So in the previous class, we talked about a type of very strong levels. As you know, we call it visible SNR level because it is so much visible for everyone on any time frame, and of course from far away it will be visible for us. So we call it visible SNR level, and we talk about how to draw these kind of level. Like for example, this is a support level here, this one. So as you can see, this is a visible support level, and we can draw it like put our first line with the lowest bearish closing point. So here, as I said, sometimes the market open with some gap, right? So here you can see there is a bullish candle, but we don't care. We don't care about the bullish candle for the support lowest bearish candle. And the second line, we have the wicks, but here you can see our wicks are too narrow here. If I draw them with the wicks, see, it will be a very narrow area. So it will make me confused in the future whenever the market hit this area. It will not helping me. What should we do here? There is no other wicks. As I said, we have the market, the previous market always. We have to go back and here get help from these candles. We can get help from the candle body or the candle wicks. No matter. The thing is we adjust our area to the average size area like that. So see, this way you can make the level perfect, and in the future it will work just fine. And you can see the most reversal happen, it is exactly happening from my area which I draw. So if I draw it differently, bigger or smaller, it will confuse me. But a perfect size area, you can see it working just fine for us. So this is how to draw for the support. And we talk about the resistance. For example, if you find a good visible resistance like this one here, put your first line with the highest bullish closing point. And yes, it is my laptop monitor. It is 16 inch. So no, I'm not using the larger monitor. No. So what is you mean you have trouble to going back to the chart? You mean you can unmute yourself, I think. No problem.
Yeah,
Oh,
pocket
pocket.
option, it just doesn't
Yeah,
show
yeah.
that much history. So you have to turn off the auto scroll or it continually jumps forward. And then going back, it has just some weird features where I especially when a market has trended really hard, then as you go back, it like resets in the screen. So
Okay,
um
so it means like it do this, right? Whenever you go back, it just come back automatically.
well, that's one thing. So you have to turn auto scroll off, but then
Yeah.
also it doesn't it almost seems like they make it so you can't see very well.
Oh, yeah. So that is the problem of the broker.
Right.
Yeah. So no, in this platform, you can see there's no problem in going back.
Yeah, that looks better than pocket option in that regard.
Yes, yes,
Because I
yes.
mean,
So
you're looking at. I was trying to draw these yesterday, and it's like for some where there's been a lot of price action in an area, it's pretty easy. But when the trend moves you a long way up or down, then when you go back, you have to go back
yeah,
a
yeah.
long way, and it can be just kind of
Yes.
confusing to get there.
Yeah. Yeah, so yeah, that is a very good point that you mentioned. So you can switch those kind of chart. Yeah, there are sometimes the market go so much trendy, and also in order to take a trade in that situation, that is bad also, because we wanna the market that most of the trader, it don't be difficult for them to locate the low, right? So if it is too much going back, and you cannot see the past of the market, leave that chart, because that chart will not help you, and it may confuse you. And if it don't confuse you, it may confuse the other traders. And this way you may lose your trades easily. So you have so many options, you have so many charts. So don't try to trade on those kind of chart that you mentioned.
So we're more looking for a
So
ranging market, like a ranging market
not the
where
range.
the
So yeah, the ranging market, I will explain you in the next class. That is very helpful also, but I don't mean like the ranging market, the market that the past it is not that far. So as you mentioned, some of the markets. So this one is good. See, this is the market. This is the past. See, it is not hard for us to see the past of the market, but some of the market, especially in the OTC, so there will be no pass. Still, this one is good. See, still with some scroll, I can see this market pass. See, this is not a ranging market. It is totally trendy. And the pass here with one, two, three here, I can see the pass here. These are no problem. But in
got it.
OTC, sometimes you see the market is so bullish. Yeah. If you go deep pass, you're going and going and going. There is no pass for that. So don't trade on those type of markets. They are not good. Okay, so let's continue. So here for the resistance, put your first line with the highest bullish closing point, and the second line here you have this candle wicks. So you can see here one, two, three, four, five wicks we have, but we choose the one that give us the perfect size area. So this was uh, about the previous class. And today class we wanna talk about how to trade whenever we draw a level. Now we wanna take the trade with that level when we can take the trade. So we have to wait till the market close at the level. But what is my mean about closing at the level? So let me explain you clearly. Whenever you see, for example, we wanna use this level as a support. So you see the market close just above the first line. This is at the level. Or the market close in between. It can be anywhere, but in between in the area. So in the area also, it will be at the level. And the market close just above the last line. This will be also at the level. So these three are at the level. You may ask, can we trade like with the rejection? So some people they wait the market hit the area. Here they will place a higher option, hoping that the market will give them a rejection like this, and they will get a ITM here. They will win the trade here. So yes, it can work also. It is also a way of trading, but it is a little bit more risky. Why? Because sometimes the market hit the level and close fully, like in the last line here, just above the last line. It closed with a full body, and there might be no rejection at all. Or sometimes, in some situation, the market hitting the area and break it easily like that. So see, trading with the rejection, it will work for sure, but there are some places that you may easily lose because of this risk is in there. So that's why the best thing that you can do it is waiting for the market close at the level. And these three types, they are exactly at the level. So the example that why I'm trying to tell it is here. See, here this candle closed fully. If you trade with the rejection, you will lose. But if you trade with the closing at the level rule here, see, you will win here. Also here, see, the market hit the area, you may place your trade lower option if you're trading with the rejection. But see, the market totally crossed the line. So if you follow the rejection rule, you will lose. But if you follow and wait till the market close at the level, you can see this candle just crossed the level. There is no chance for you to trade here, open any trade, right? So you will escape this loss like that. So that's why I'm telling uh, the rejection, it is more riskier than you wait till the market close exactly at the level. So these three types, they are safest way for you that you can open your trade. This is the market which close exactly at the levels these candles. Sometimes you will get confused by this kind of candles, which I will warn you here. The candles that they are too close to the lines, but there is no touch or rejection like that. Okay, so there are too close that you may think it is now at the level. You will see there is a very, very small, tiny gap to the area. So you may make the mistake here and place a higher option. But this way, you may lose your trade easily. Why? Because still there is a very, very small gap. So the market can make a candle like this and then it start to reverse. So if you place your trade after that candle, after this big candle here, which still have some gap, you may lose and face a red candle. Also, in other hand, it can be like this because it is too close. It can just reach the line and reject back, go up like this. So it can be also a bullish candle. See, this is a 50-50 chance, and it is risky for us here to place our trade a situation like this. So whenever you see the market, it is too close, but there is no touch, there is no rejection. The market still didn't hit the lines. It is not at the level. Also, sometimes the market hit and cross just a little bit. So now you may think it is not breakout, still it is at the level. You may think if you place a higher option, it will work. Also, in other hand, if you think it is a breakout and you going with the sellers, it is good. If you place a lower option, you may win. The both thinking are wrong. So you may lose your trades on this situation because it can be easily a fake breakout. The market shoots up and completely go up after this, or it can be a real breakout. The market go up, reject back, and close a red candle like this and go down. So see again, we don't count this at the level. This is not at the level. And if we're thinking about any type of trades after these candles, we may lose our trade here easily. And also, the next thing which we cannot trust at all whenever the market hits the area, but it reverse and close with the long rejection. So as you can see here now, the market touch the buyer's area, but it just go and reject back and close far away from the buyer's area. Now what will happen? Now two things again can happen. First thing, the market at this level here, it hold too much power. As you know, these are very strong levels, right? So when the market hit here, the bars reject this candle. So now the bars can enter with this rejection here enter directly and make a bullish candle here easily, or because this rejection, see the buyers start here, right? The buyers enter from this place. So the market shoots up here because of the buyers who enter on this level. But the sellers can be strong and powerful here. So again, they try to make one more candle here. So see, again, two things can happen here. We cannot decide on this type. So these three, they are not at the level, and placing a trade with them, it will be totally risky for us. So after this situation, if you place your trade, the chance that you lose it is 50%, and the chance that you win it is 50%. And we wanna avoid this kind of trades, which we are not sure. We, as I said, we are only looking for the trades that have 90-95% winning ratio, and this way only you can open a trade when you are sure about it. So the only thing that you can search for it is where the market is at the level. So uh, what about this? I said here, you can see here that this market, this is a visible level as we draw together. This is exactly at the level. See, just at the last line. Here, easily you can place your trade lower option, but here, this market touch, see, this is the exact situation. The market touch here, we cannot think about here to place a higher option, and also we cannot place a lower option here. So the both things are risky for us. Anything can happen on this situation. But again here, see, this is at the level. See, we count this at the level. We can open our trade here, or this one. We count this at the level. We can open our trade. But this one, see, cross just a little. We cannot here tell, no, it is still at the level. Let me place my trade here. No, even though a little bit, but a cross is cross. It means now the situation is risky. If we place our trade, we may lose our trade easily. So always be careful. These are at the level, and these are the risky places. So we only and only follow whenever the market is at the level. Like again on these examples, the market here, see, it touch here, still it is not at the level, or here it touch here, still there is a gap. On this situation, mostly the people here lose on these situations, which the market, it is not at the level. But this one here, it is at the level. Now you can place your trade here easily because it will be at the level and the market will reverse. So as I said, whenever you see a rejection like this and the market didn't close at the level, it is risky to trade. But let me show you one more condition. So let me bring here the chart. So for example, here there is a level, okay, and you see the market come here, close with the rejection, right? So here you cannot place any trade, right? So here this is a 50 chance, as I said, you cannot place. But right after that, the market, you will see the market close like this. On this situation, now you are happy that okay, now the market is closed at the level. Let me go and place my trade, right? Here it will be a very, very risky trade, but so many people fall in this trap and they will place a higher option, but they may easily lose their trade here. The market give them a red candle. Why? The reason is too simple. Let me show you here. As you know, the market downtrend pattern is like this, right? This is how the market moving in a down direction. So this is the same level, right? See, what is the movement pattern telling you now? It is telling you the first time which the market hit, we can expect a reversal according to the pattern. But the second time, according to the pattern, we will expect the market cross the line easily, right? See? So this is the downtrend movement pattern. In other hand, the level, it is not a normal level. It is a very, very, very powerful level which we find and draw this, right? So if you check this market here, if you check this one here, this is the pattern which happen in 1 minute, right? If I switch in 5 seconds, I will exactly see this. The market hit, it reversed back. Now it is trying. So what this one reminds you, exactly this movement pattern, right? Downtrend movement pattern in a lower time frame will telling us the market in the second time it will cross easily. So see here the chance that the market follow the pattern is there, that it cross the level easily and don't give you any chance here, or it can, because the level is too much strong, it can reverse and totally break the downtrend pattern, make a uptrend pattern like this. So see, two chance going on again. Whenever you see the market touch the line and then come back like this, touch, reverse, give you a wick, and then it close at the level. This is a trap. Don't trust at all. But it means whenever you see the market touch the line, it means over like this situation. If you see just it touch and close with the line rejection, it means your chance is over. This level will not work ever. No, it doesn't mean like that. So how you can trade on this situation? You have to wait the market close at least one candle. So see, it can be one candle, two candle, three or more. At least one candle. But the thing is, the rule is it shouldn't touch our line at all. So this candle, the color doesn't matter. It can be green or red. The only thing that it is matter for us, it is that this one shouldn't touch the line. So it must be like this. There is no touch. The rejection can be close, but it shouldn't touch. So like this. So we will wait for one candle at least or more. And then if we see the market close at the level here, so now there is no problem here. We can take the trade here easily. So see, look at the difference. If you ever see the market, this rejection, then close at the level, this is risky. This is a very, very risky trade. Totally wrong, because the pattern telling you it will go down, the level telling you no, it will go up. See, two things are against each other. And this is exactly how you must trade. You have to look at the market in different direction. It is not like only you learn the levels, you draw the level, and every time the market closes at the level, you expect to market reverse. No, you have to check it with the market direction also, with the market movement pattern also, that you see these two, they are against each other or no, they will help each other, and it give you also more chance to win. So see, the direction is important, the market movement pattern, and also the level. So don't ever look at the market in one direction, in one angle, which you draw the level and you know the level, you expect every time it will work. No, it will work easily, but you have to understand the market movement pattern, which we will talk about it. It is in the future classes, so don't worry. I will tell you the key points about the market movement and the market direction. So they will help you so much. So don't worry,
Amen.
that's why I'm telling. Yes,
Um, can I ask you a question?
yes, yes,
So over here,
yes.
so let's say that you're anticipating this coming down and reversing. Excuse
Okay,
me.
no problem.
This technically doesn't this doesn't qualify, right? Didn't close inside the level.
Okay, so
But
see,
but then we have a strong bullish candle. Like, does
yes,
this count as our overall pattern shift that we were waiting for, like a say a QM or something like that? Like this didn't technically, but you can see that clearly there's been a reaction.
yes, yes. So yeah, let me tell you this reason here. As I said, whenever you see the market, it is too close, but as I said, no touch. But here, what you are seeing this week here, see, there is a touch. So it means the whenever the market is too close and there is a touch to the line, these are count at the level. The only moment we cannot tell it is at the level which we don't have this week. Okay. So this situation, it is the risky trade here. So there is a wick here, the market touch here, and the bullish candle with the gap open exactly at the level. So here it count as a trade here. You can easily place your trade here. There's no problem.
Okay,
Yes. So
thank you.
the you're welcome. So the point was this. If the market touch close one candle at least, then it close exactly at the level you can place your trade. But right after the touch, if you see the market close, it is risky because it is against the pattern. And the example, it is exactly here. You can see the market touch here. If we see any bearish candle here, which close like this, we cannot trade. Right after the rejection, if we see any candle close exactly also at the level, we cannot trade. It will be a risky trade. But if we wait, the market close at least one candle. Here you can see one, two, three candle close. So the rule is they shouldn't touch the line. See, this candle, they didn't touch the line. And the last candle close at the level, you can open your trade here easily with the buyers. So don't think whenever you see a touch, it over. No, you can wait. There is two things here that the market may give you a bullish candle here or give you a bearish candle after the touch. So if there is a bullish or bearish, if they didn't touch again, the color doesn't matter. It can be bullish, it can be bearish. The point is it shouldn't touch the line again. And if this rule happen, and the market again go and close at the level like on this exact situation, you can again place and you can see as you mentioned the confidence in the buyers. So they are so sure from this pattern here, from this level here. So this point also exactly it is in the breakout. So you are trading here, you're seeing a bearish movement and you are seeing a breakout, right? And after the breakout, you are seeing a bullish candle here. You are happy here that the market will give me easily a red candle like this. Why? Because you are seeing a momentum, you are seeing a breakout, you are seeing the market close at the level, there is a rejection. Everything makes sense to you to place here a lower option, right? So here you place a lower option and you will see the market will easily coming back here like this. And you are wondering, we do everything correct. What happened? You just fall in a trap of a fake breakout. And a sign, whenever you are trading with the visible level, a sign that there is so much chance it be a fake breakout, it is this sign. The market break. Right after the breakout, you are seeing the market close at the level. So this is a sign which it is a warning for you that something's gonna happen here against you. If you place a lower option here, you may easily lose. I'm not telling every time the buyers will show up. No, it is again 50-50% chance. Sometimes also the market fall down like this. So don't think whenever you see this it will go up. No, I'm telling about the 50-50% chances, which the chance that you make a mistake it is higher. That's why I'm mentioning this. So which breakout you can count? Whenever you see again a breakout, after the breakout it can be one candle, two candle or more, at least one candle. And the rule was it shouldn't touch, right? If it touch and then close, it will be against the first rule, right? So we cannot take our trade here also. So it shouldn't touch the line. It can be one candle, it can be go down like two, three, four, five, and then come back. No problem. At least one candle. And it shouldn't touch the line. And then if it close at the level, now you can place your trade here, a lower option. So again, look at this difference here. Right after the breakout, if you see the market close at your level, it is a risky trade. It can be a fake breakout and easily you can lose your trades. But after the breakout, market at least give you one candle or more without touching the level. Then after these, the market close at the level, you can place your trades easily here, a lower option. And about trading with the visible levels, don't worry. Whenever you see the market is at your level, so like this one here, the market is at your level. You don't need like take 5 second confirmation, or you don't need to see this is a bullish momentum, or the last candle which close at your level. It is too strong candle. These are not mattered. If you find the level correctly, it have the power which give you at least 1 minute one candle here. But the point is, whenever you see this one here, so you open the chart, you draw the level, you see the market close at the level, and when you reach, you are seeing this candle is about to close, right? Can you place in the next candle after this a lower option or a higher option? No, don't try to do that. It is now risky. The safest place that you can trade it is right after closing of this bullish candle and exactly at the opening price of this bearish candle here. So it is exactly at the low, right? After that, if you see this candle go and then you lose the chance to open on this candle, don't think to place the candles after this, like this candle or this candle or this candle. These will be again in the middle. They are not at the SNR level. So what should you do on this situation? Just wait, go and find, for example, a visible support level and wait the market go a little down. It close at this support and then you can open place your trade here a higher option. So don't worry, the market is full of opportunity. If you miss some opportunities, don't be in rush, not at all, don't risk. So guys, this was for today class. If you have any question, you can ask me now.
Hello, hello. Can you hear me? Hello,
Yes, your voice again it's too much weak.
hello, hello.
Yes,
Okay.
yes, hello.
Um, I also trade on pocket option, and it cannot zoom so much. It's only zoom for 3 hours. So and it's hard to identify the visible level. So in your course, you have say the strong level has stop momentum and start momentum.
Yes,
Can I use that?
yes.
Can I use
Yeah,
that
so
sign
yeah,
for
that
the?
yeah, so that's you said those that the level start a momentum, it give us very big candle or it make too many reversal. Those are the strong levels sign. Yes,
Can you
but
give me
the
an example?
most yes example.
Yeah, yeah.
Yeah, for example, this one here. Yes. this level here, about the point that you said, yes, it see there is a momentum, a stop, make a momentum, and these are the sign that the level is strong. Yes, correct. But we are talking about the strongest point in the market, which are visible levels. These are strong, but only for 1 minute chart. And as you can see here, they work here, but see the market cross, here cross, here cross, here cross, here it about to cross here, give us a doji and then bars enter. So see the point is sometimes it may work, sometimes it may not. And that's why I'm telling the visible level it is the best thing for you. Okay? Okay, any other question?
Hey, so just a little bit of question about your workflow. So, like if you go to trade, I see you have charts open at the top. Do you mark those up and then have all of your visible levels, and then you can switch between them and see what's going on?
Exactly. Exactly, very good. Yeah. So the fastest way that you can trade with the visible level, very good question. So here you can see this is the price bar here. See this line in the
Hmm.
market. So the fastest way it is look at this and see now we have a visible resistance here, a visible support here, right? So now the market is in between. I can draw this one as my resistance. I can draw this one as my support. And then I can switch to the chart and do the same for all of these. And then I can do this monitor all and see here like this in 1 minute 2 minute you will get a very good opportunity if you do this way. You monitor all of them at once. You can wait till the market hit one of the line easily. Okay.
Mm-hmm.
And guys, sorry, we are hitting about to hitting the 40-minute limit again. So any other question?
Perfect. Thank you.
You're welcome, you're
Yeah.
welcome. So you're welcome. So if you don't have any other question, we can continue tomorrow. Okay, that's good.
Yes. Yes.
Great for me.
Okay, very good. So, guys, have a good day. Goodbye. We will end the session here. Bye.